give us a briefing how your equity world links into Chair Yellen's world.
Well, equity investors, surprisingly, we're sitting here near record highs across almost every index you can think of, but sentiment is still pretty crud. I don't know how else to put it. It's a nice technical term. Our panic euphoria model is in neutral territory. When we look at money flows into U.S.-oriented equity mutual funds and ETFs, it's still negative. So people aren't really thrilled here with markets despite it. They've got a whole list of excuses ranging from Trump to valuation to earnings that are going to peak out. I've got a list of about 12, 15 items that they kind of cite regularly. So they haven't really jumped in on this.
Right. Tobias, what will it take for them to jump in on this? Is there one catalyst?
You know, the stranger thing is, Francine, that you typically end up having markets keep going up and eventually pull people in. So we haven't seen this kind of euphoric territory. It's usually some sort of capitulation that they feel they're missing out, what is lovingly called in today's vernacular as FOMO.
All right, Tobias, what do they need to look at in Fed communication? We spoke to Jim Bullard, and actually, if they feel a little bit better about inflation, about wage growth, about the Fed actually raising interest rates because the market now doesn't believe what the Fed is saying, is that a reason for more investors to come in and buy?
So I would say there are different things. I was at one of our banking conferences recently and listening to some of the bank executives talking about weak lending activity. And what we have found is, for example, the senior loan officer survey from the Fed tends to lead loan activity by about 6 quarters. So we're just about to turn the corner here in the second half on improving lending activity. And I think that would be part of what would get the Fed a little bit more excited and investors more excited.